Today I'm going to do a little bit different of a video for you. Today what I'm doing is I'm going to give you kind of a quick and dirty rundown of the way that real estate agents determine value when they are helping you understand what the value of your home could potentially be in any given real estate market. So the first thing that you need to know is, what is a comparative market analysis? A comparative market analysis is a cost comparison approach to making an opinion or formulating an opinion about what somebody's house could potentially sell for. It's a real estate report that estimates a home's value by comparing it to similar properties in the area. Real estate professionals prepare CMAs to help sellers set listing prices or pricing strategies and for buyers to make competitive offers. CMAs consider many factors, including the property's location, the age, the size, construction, style, and condition, amongst many other things, as we, as real estate agents, are trying to help a seller, in most cases, figure out where their house could potentially list for or could potentially compete for in the market. So one thing that you need to know when you are learning about this is the difference between a CMA or comparative market analysis and an appraisal. And a lot of people don't know the difference, and a lot of people will confuse these two and kind of think that they're the same thing or vice versa. It's important to understand that a CMA, comparative market analysis, is a real estate agent, broker, buyer, or seller can perform a CMA, which is a more casual and driven by the agent's experience and more of the agent's instincts. The purpose of a CMA is to help determine a listing price and a pricing strategy for a home that's ready to sell, or it's based on similar properties in the area. A CMA considers recent sales, pending sales, and the absorption rate, which is just a fancy term for the amount of time that it would take based on a certain data set for all of the listings in the market to sell based on supply and demand. It also lists information about the property that is currently on the market, expired, or pending, along with low, median, and high prices for the home and an estimated number of days that you might expect to be on market. So a comparative market analysis is more used by real estate agents, and they use sold comparables, but they also use pending listings, active listings, expired listings, so on, to gain a market sentiment. Again, a CMA is you are trying to figure out where your home could compete in relation to other homes that have sold. Now, the difference between the CMA and the appraisal is an appraisal is a licensed or state certified appraiser who performs an appraisal on behalf of a bank, usually when a buyer applies for a loan to purchase a house. So generally speaking, most often the appraisal is going to come into play when it's ordered by a bank when somebody's attempting to purchase a home. Not always. Sometimes a consumer will just purchase an appraisal in a different scenario. The purpose of an appraisal is to determine a fair market value of the home to ensure that a bank isn't lending the buyer more money than is necessary. Appraisals are a more formal and are typically driven by the needs of the mortgage lender rather than actually a selling process. Appraisers use methods similar to those used in a CMA in the sense that they use a cost comparative approach, but they don't have a vested interest in any purchase or a sale of a home, and they usually only consider closed sales to help them formulate an opinion of value. A CMA and an appraisal are the same in the sense that it is an opinion of potential resale market value. So if you got 10 different appraisals by 10 different appraisers, you would end up with 10 different numbers. Now, they'll all probably be in the same ballpark as long as they're using the same data sets, but it is the appraiser's opinion. It's the exact same thing with a CMA when a real estate agent is using a CMA to try to formulate an opinion of market sentiment or where you could potentially compete in a market. It is just that agent's opinion. So anything you do when you're making a hiring decision, don't hire your real estate agent based on what their number comes up with in the CMA, because at the end of the day, the market is going to determine the market value for your home. So here I am in the software that we use where I live, but it's called Paragon. A lot of people use the exact same software, but all real estate agents are going to have some kind of interface that is similar to this. Now, what I'm going to be doing here isn't the same exact thing that every single real estate agent in the world is going to do, but what I want for you to understand is kind of what our mindset is, what we're doing behind the scenes, where we're coming from when we are helping you determine what we think that your house might be able to sell for in the market. Now, what I've done is I've just mocked up, this is a house that I used to own, so it's just a good property to use, but I've mocked up the beginning of what I would do to start to formulate a comparative market analysis presentation for a seller client. So the first thing that I would do is I would upload the subject property into my software so that I have a baseline. So here I have a 3-bedroom, 1.5 bathroom house with a basement and a 2-car detached garage. So just a good starter home. Okay, so once I have loaded that up, the next thing that it's going to do, and I'm not going to do it in this scenario, is it's going to ask me to upload a client. This is for the presentation purposes, but I'm not going to do that. What I am going to do is I'm going to get into the comparables. And this is where I'm actually scouring the market for data. I'm scouring the market for homes that have sold that are similar to mine. There's not going to be any house that's exactly the same as mine. What I am looking for are houses that are similar, because what you're going to see that I'm going to do is on the back end, I'm going to make adjustments to each of the comparable homes to try to make them as equal to mine as possible. And again, this is an art, it's not a science, but there is some science to it. So that's what I'm going to do. So here we're going to add comparables. I'm going to go in here and I'm going to select residential so that it's only giving me residential homes for sale. And the first thing that I'm going to do is I'm going to go to the status and I'm going to start out by looking for only closed sales. So I'm going to go to only closed sales. The next thing is I want a snapshot of the market. So I don't want to look back too far and I don't want to make that snapshot too tight. So what I like to start is about 6 months. That's going to give me a pretty accurate reflection on what I think that the current market sentiment is. The next I'm going to select, I only want houses for sale, and you can see right here the number of houses are going down. The next thing that I'm going to do is I'm going to select an area. And the way that I like to start with this is I like to just draw on a map based on my knowledge of my current market, what neighborhoods would be similar to mine. And you could argue that any buyer would consider purchasing a home in any of those different neighborhoods that are surrounding mine. In my particular area, in most particular areas, the things like school district, proximity to shopping and restaurants, proximity to downtown areas, those type of things, these are the things that are important. So I try to factor that in when I am selecting my area. So I'll zoom right in here. I live in this city here, and the subject property is in this area right here. So here you see I have a square. This is what we call a section. So I'm going to draw on this section, and I'm just going to see what has sold in the past 6 months, if anything, in this section right here, because I know that all of these houses are pretty similar. So I'm going to go here, and actually it looks like we have a fair amount of comparable sales. So I'm going to stay with just this very, very tiny area because I have, at least to start, enough data. So I am going to select that, and I'm going to go back to my criteria. And now you see that I have 8 listings. So without anything else, I just want to look at these 8 listings before I start to tune that in a little bit. And I want to see my subject property is on Carolina Street. So you'll see that I have one here on Carolina Street. I have one here on Carolina Street, and the rest are on some of these kind of outlying areas. Remember, I'm a 3-bedroom, 1.5 bathroom with a 2-car detached garage. So I look right here and I look, and something that I find interesting is that almost all of them are 3 bedrooms, which is fabulous. And looks like most of them only have 1 bathroom, which is not a big deal because we can make adjustments if we need to. So let's dig into what we have here. So what I'll do from this point is I'll start to look through each one of these sold listings and make a determination of which ones that I think are the most comparable to my house, that I will have to do the least amount of adjusting to formulate my opinion of potential value. So I will quickly kind of go through doing that, and then I will cut to the screen and show you the listings that I selected. Okay, as I'm going through this process, I'm starting to realize that I need to make this a little bit more of a finite search, because I'm finding that most of those listings, while they have a great geographical proximity, they don't match the subject property or the house that I'm trying to comp, in the sense that a lot of them didn't have basements, which you have to make a large adjustment to offset that difference, and a lot of them were 1.5 story or 2 stories. So I'm actually going to expand my proximity to get myself more closed sales, and I'm going to hone in on what the actual houses are going to be. So I will do that right now. Okay, so now what I've done is I've refined the search and expanded it, again, based on my knowledge, and any real estate agent is going to have knowledge of their market, on what I believe that a buyer would essentially gain the same benefits from living in all of these different neighborhoods, same school districts, same proximity, those type of things. It is reasonable to believe that any buyer would purchase a house on this street and would purchase a house on any of the streets inside this geographical range. I've changed this structure now to look for only single-story listings, only houses that have at least 3 bedrooms, only houses that have a basement, and only houses that have a garage. So now I know that every listing that I'm going to see in my search inquiry is going to have all of those things, which means that I don't have to make any massive adjustments based on what I have in my current search inquiry. I am getting right now about 10 listings, and what I'm looking for is about 3 to 5 total listings that I can add to my CMA report. So let's see what we have. I'm going to do the same thing, go through, look at each of the listings, select the ones, and then I'll be right back with you. Okay, so I've looked through these listings. I've found 4 listings that I believe are very similar to the subject property. So now I'm going to bring them into my CMA report, and I'm going to look at each one of them individually, make any adjustments that I see fit, again, based on my knowledge. And there's no rule of thumb for how to make adjustments because every single market is different. Again, this video is more just to kind of teach you the principles and what your agent's doing on the back end. The hard part is finding the comps. That's really the hard part, because if you're able to find some good comps and bring them into your CMA, most CMA softwares are going to do a lot of the heavy lifting for you on the back end, as long as you're able to find some really good comps. So let's get these and add them to our CMAs. Another thing before we go is that you see the square footage here. That's a very big piece to the puzzle, because you don't want a house that's vastly bigger or vastly smaller than the subject property, because again, you'll have to make such a huge adjustment to offset that square footage that it's going to be really tough to get an accurate reflection of how that's going to impact your CMA. So we'll add that thing to our report. We'll select all 4 and we'll put it right in there. Now you see we're back to the CMA Wizard interface and we have our subject properties saved into our report. Now we're going to move on to the calculated adjustments. Again, every software is going to be a little bit different. I've already have mine set up with a default, so I'm just going to move on to the next one. Now you'll see that I start at the beginning with my first comp. You'll see right here, 1 of 4, and this gives me all of the details of my subject property, which is on the left, and the comparable property. And if I want to look at the photos to give myself to kind of compare the kitchen, the 2 kitchens, compare the finishes, fit, and all of that kind of stuff, I can just simply select on that. So I start at the top and I start to look across here. And one of the first things that I'm looking for is right here in the concessions amount. Now, the first thing that you need to do is always subtract the concessions amount. Concessions is just a simple term for a credit that the seller gave to the buyer when the buyer bought the house. So if the seller in this scenario gave the buyer $4,755, then we would want to subtract that from the price right away. So we would just simply go minus $4,755, and you'll notice that down here, you can't really see it, but the adjusted price is going down. Okay, so we go on to the close date. This just tells us when it sold, cumulative days on market. They were only on market for 3 days, which means that the buyer market really liked that particular listing. You'll see that the 2 lots were almost virtually exactly the same. The same school districts, ownership, all of that kind of stuff. Above grade square footage, it's so close that I'm not actually going to make an adjustment in this scenario. And this might be blasphemy to some real estate agents, but for me, again, a CMA is almost a shoot from the hip type of deal, but I'm not trying to split hairs in this scenario, because what I'm trying to do is actually get a range. I'm trying to gain a sentiment more than an exact amount, because it's frankly impossible to know exactly how much a home is going to sell for. So in this scenario, we're within 75 square feet or something. I'm going to leave that alone. It says that I have 2 bathrooms, but I don't. It only has a half a bathroom, which our comparable property has 3 bedrooms and 1.5 bathrooms. Garage, subject property has a 1.5 car garage, 2 car garage. Again, I'm not really going to make a massive adjustment unless one of the 2 garages, which isn't in this case, has something significant that I believe would move the needle. So in this house is very comparable. This is a really good comp. Public remarks, this is just the listing description, and in this scenario it's showing that there's a little bit more below grade square footage that is finished in this scenario, but I know this house well enough to know that it has a very low end finish, so I don't think it's really going to move the needle. In this scenario, I'm actually not going to make any adjustments to this comparable sale. So I'll move on to the next comp, and here we are with the next comp, and this one is on Haley Street, which is the street adjacent to Carolina Street. And so again, I'm going to do the same thing. I'm looking for concessions amount. There's no concessions. I will say that this comparable sale was listed for $172 and sold for $180, so it actually sold for above the asking price, which is great. That means that there's a lot of demand for this particular market. Again, exactly the same size lot, same school districts, and look at this, the square footage is so close. Again, I'm not going to make any adjustments. Looks like the same bathroom, same age is very similar. I mean, this is a very good comp. Again, I'm not going to do anything to this comp. I am going to look real quick. Let's check out and compare the finishes. This one, I would call it updated. I wouldn't call it, overboard. Actually, I wouldn't even call it updated. This is pretty similar. It might have better floor coverings than the subject property, but the subject property doesn't have any of this wall paneling or anything. So I think it's going to pretty well even out. I'm not going to make any conditional adjustments to this listing. Does look like it has this kind of low-end bonus room up top. There's really nothing that's going to move the needle. I think it's very comparable to the subject property. So again, I'm not going to do anything. I'm just going to move on to the next one. Here we have a nice little ranch, and this one is on Carolina Street. So you see 2106, 1302. Now, I know that this is just across Haley Street from where the subject property is located. Again, check this out. 159.9, so call it 160. List price, sold for 180,000. So that proves there's tremendous demand for this particular submarket. What that means, what I'm using that piece of information for, is that when I'm having a pricing discussion with my client, I'm probably going to advise shading our pricing strategy more towards the high end of the spectrum, because I know that there's strong value in this market, because there's strong demand in this market. So we'll keep on going. Again, same exact lot size, same school district, pretty close. It's 100 square feet. I'm probably going to leave it alone again. You could make an argument that you should make an adjustment. And actually, maybe I will, just to show you the way that I make adjustments. Again, every real estate agent is going to be different. But in this scenario, I would take this amount and I would subtract it by this amount. So let's just call it 100. And I would go here, and I would take the sales price and I would divide it by the square footage to give me $1 per square foot, and I would assign an adjustment that is 50% of whatever that number is. So I'm not going to do it in this scenario, but that's the way that I would make a square footage adjustment. Again, real estate agents, get in the comments, blast me, tell me how wrong I am. I've been doing it for over 10 years, and it works great for me. Yeah, another extremely comparable. I have a little better garage. I might make a little adjustment. Let me take a look at this garage and see if I really want to make an adjustment. Yeah, probably. I would probably, for a 1-car to a 2-car garage, I'd probably make a $5,500 adjustment in our market. And the way that this just takes experience. There's no just calculator math that says this is how much you have to adjust for these particular things. You have to know the market, and this is why you need a real estate agent to go through this process, help explain it to you, so that you don't have to guess on all of this stuff. So again, I'm going to leave this comp alone, and I'm going to move on to my fourth and final comp. This one's on East Lawn Drive, which is the street adjacent to Haley Street, just north of my subject property. Again, I have another ranch here, listed at 189, sold for 190, so still sold over the asking price, but pretty close. Took 14 days to sell it. It sold in the spring, and has the exact same lot size as I have. Going on, again, we're so close in square footage, I'm going to leave it alone. They have a 2.5-car garage. I have a 2-car garage. Another thing that I forgot to mention is that when you are making adjustments, the rule of thumb, the golden rule to making adjustments in a CMA is to subtract from the better house. So if the comparable home has 4 bedrooms and I'm comparing it to a 3-bedroom house, that's my subject property, I want to subtract value from the 4-bedroom to make them as equal as possible. If the subject property has a better garage, like in the last comp, has a 2-car garage, and the comparable property only has a 1-car garage, I would want to add value to make them as equal as possible. So that's the golden rule of thumb in what we're doing. So again, I'm really not going to touch this basement 2-car garage to a 2.5-car garage, 3-bedroom, 1.5 bathroom, 3-bedroom, 1.5 bathroom, pretty similar square footage. Everything's the same. So I've done a good job at selecting good comparable sales. So now the software is going to do a lot of the other heavy work for me. So I'll quickly go through and what the next steps of the process that your agent will likely be doing. So I'm happy with all of that. Now I would just go through and I would actually select the interface for the way that I want for the presentation to look. And generally I will print these out, give them to my client, or I will generate a PDF and email it, or both. So in this scenario, I got all these different ones that I can pick from. I'm just going to pick something really simple. maybe like this one. My company's colors are orange, so I like orange. So let's go there, and then I can always just preview what the front page is going to look like. It's just going to look really simple here. So I am going to move on to the next thing. Footer, disclaimer, nothing that really you care about. No disclaimer or anything. I'm just going to keep it moving. Next is the presentation setup. This is where I go through on the side menu and I figure out what I actually want. There's no right or wrong answer. Every single agent is going to be different on what information that they want in here. But in this scenario, I'll put in the name Jane Doe. Doe, 2106 Carolina, and go like that. There we go. So, and then it'll show who it's for, who it was prepared for. I can change the title to Jane Doe CMA presentation, and that will just change what it looks like on the front page. Cover style, all of this kind of stuff. This is all just generic stuff, but that's the cover page. I don't put in a cover letter personally. I don't put in an agent resume, but your agent might, and that is probably going to work good for them. Subject property details. I like to have this in my report because it just kind of shows what the subject property looks like. Again, I can preview this and see what that looks like. So I'm just going to go through here, grab all the adjustments, and I'll show you what I'm going to go through here, select everything that I want to be in my report, and then I'll go ahead and show you what the report will look like on the back end. Okay, I've selected all of the different things that I want in my CMA report. So now I will go ahead and generate the actual report itself. So I'll go here, generate the report, and bada bing, bada boom, it starts doing its thing. And again, this is just what we use in our market. Everybody might have a different type of thing, but this is what the report is generally going to look like. Let's see if I can get a full-size version for you. Okay, so here is a better version. So you see the cover page, and you'll see that I have information about the subject property, which, you know, in this scenario might be your home. Summary of adjustments, kind of goes through, shows any adjustments that I made, which in this scenario I didn't make almost any, so keep that in mind. On down to the comparable reports, so this shows all of the comps that I used and all of the information for each of the comps. And then kind of gives a summary here at the end with the adjusted prices and so on. Right here is a conclusion essentially from all of the information that was in the previous couple of pages. So here you see the highs, the lows, the medians, the average, and then the suggested list price, which in this scenario is $177,336. So again, it's kind of a random number, but again, we're just trying to get a ballpark. And that's what we're trying to do here. In this scenario, I'm probably advising that my clients list their house at $180,000 based on a lot of different things, but that's probably what I would do. Or I would list it at $175,000. I always price at whole numbers. You know, kind of a lot of the same information, dollars per square foot, you know, all of that stuff. This is just to help a client understand the sentiment. This is the difference, the comparable property statistics as it relates to the list price and sold price. So just kind of a visual that tells you how much they sold for in relation to their list price. Information here on the lowest asking price, the lowest sold price, average price, average sold price, average list price, so on. It gives you the average dollars per square foot. This is another thing that you can just do that will give you some insight. You could take that $178 per square foot, times it by the 1,024 square feet that we have on average, and that could give you a potential piece of data as well. 6 days average on market, comparative here. kind of the same thing. This right here, I don't put any stock into these automated valuations. If you watch any of my videos, I made a video about this explaining kind of what this is, but here you can see that it's saying that the average is between the automated valuation systems are $127,000 when all of the comparable sales are selling in the 180s and higher. There's no reason why I would ever list this house for $127,000. But again, right here, you get a lot of the same information, just a different interface. And then this shows the geographical proximity for the comparable sales in relation to the subject property. So you'll see the subject property is right here. Really nice, tight geographical proximity to all of the comparable listings. So this has just been a quick and dirty, help you understand what is your agent doing on the back end when they are trying to help you understand what your home could potentially sell for. Keep in mind, nobody's perfect. Nobody's the same. There's no exact way to do this. And I might do it slightly different from one house to the next house, but it's important for you to understand kind of what the mindset is. What is your agent thinking when they are going through? Most agents, now there are some that will just guess or, go on Zillow and print out the Zestimate or whatever, but most agents are doing some kind of thoughtful market study similar to this to help you make a good pricing decision when you're selling your house. So if you like this video, give it a like, give it a share, and as always, thanks for watching.